Hey, this is Laura Wiseman. Welcome to Level Up with Living Houston. Today we're going to be talking about VA loans. I've got Dave, your mortgage guy, on here, and he's the expert in this area. So we're going to be hearing from him today. Welcome to the show.
Thank you. Yeah, let's talk about VA loans. You know, we're going to get into it pretty heavy here in a second, but I want to go over the real general stuff. VA loans for veterans, right? Mm-hmm. Serving in the military. They offer a 0% down payment, which 99% of the time is always the best way to go. It has no monthly mortgage insurance, so your payment is technically always lower than any other loan option unless you're putting down, let's say, 20%, right? It allows for lower credit scores. So for us, I mean, I can go down to a 600 credit score. Some lenders are going to be 620, but it's just a much nicer, friendlier loan for a well-deserved veteran, right?
Yeah, of course.
You know, another kind of side note is it allows for a higher max debt-to-income ratio.
Okay, I didn't realize that.
Yeah, and so what that means is it allows them to buy more home than on a VA, on an FHA or conventional loan. So it's much friendlier in that regard. I will say on a side note, many times the lender is deciding what the max debt to income ratio is.
Okay. So that might be up to the specific lender that's giving the loan.
Correct. So I'm going to give you some great examples here. Some lenders are going to say their max debt to income ratio is 50, 55%, or maybe 60, right?
Wow.
And that's your debt versus your income.
Mm-hmm.
In theory,
and just not to cut you off, but
sure.
On a conventional loan, what is the typical debt to income ratio that they're looking for?
It could be 45, it could be 50.
Okay.
You know, depending on the scenario.
So it really lets them buy more house.
Buy more home with less payment.
Okay.
So it's awesome. Now, in that situation, the lender is kind of dictating the most that they feel comfortable with from a debt to income ratio standpoint.
Okay.
The VA who makes the rules. So VA does not do these loans. Banks do these loans. Mortgage companies do these loans. The VA kind of decides what the rules are for the loan. Now, what'll happen in that scenario is the VA doesn't have a max debt to income ratio. It's really based on if you have enough residual income left over. Okay. So I just had a client, a couple, okay. They had been denied by 9 other lenders because of their own rule, because of the debt to income ratio, right? And we were able to get it closed because we didn't have those additional rules.
Okay.
So real quick.
Is that specific to your company? That's like a perk that you are able to do with your company? Correct.
Because we have what's called no overlays, right? Which means we're just making up our own rules to be conservative.
Okay.
I would say real quick as a public service announcement, if you got denied for a VA loan due to your debt ratio, get a second opinion, because it may not be the case. And this couple, they had gone through 9 lenders.
Wow.
And every single one of them said no, but we were able to get it closed. Okay. I mean, I felt so bad because even he didn't believe me it was going to get done. Like, I had to call the guy every day and be like, Bob, I'm making up a name here to keep the innocent. I was like, Bob, we're still looking great. I'm going to get you in the house. Called Tuesday. Hey, Bob, we're still looking great. Wednesday. Hey, because I reassured him. I was like, he didn't trust anybody. Everybody had let him down. He had been denied.
Yeah, after 9 denials, I'd kind of be like that too. You'd be skeptical that it's actually going to go through.
I wouldn't have trusted me. Yeah. I would not have trusted me at all. I would be the first one. I would have been like, dude, you're number 10 to tell me the same thing 9 did, right?
So what'd they do? They just kind of like wrote it out and hoped for the best, and you actually got them closed? Yeah,
it was weird. When we went to closing, the wife was pregnant. Oh, no, this is the additional part of the story. Holy crap, I completely forgot this part of the story. The wife was pregnant. We closed on a Friday. She was going to the hospital Saturday.
Okay.
So he literally was like, dude, please, if we can make this happen and close on Friday, man, my life would be a lot easier. And we made it happen. And when I showed up at closing, I was very excited, as I always am. I'm a very amped up person. And they weren't that excited, right? And I was like, aren't you guys excited, you know? And both of them were shell-shocked that they were there. The wife even said, like, I'll be honest, until we get the key, I didn't think this was going to happen.
Wow, poor things.
It was terrible. Goodness. I mean, you're first off, she's pregnant, ridiculous amount of stress, about to have the baby.
Yeah,
and then you're dealing with a home that now you may be homeless. I mean, literally, if we didn't close that, they're looking at rentals.
Yeah.
with her being in the hospital.
Right. If she is going to have to move, it's going to be with a newborn and everything's uncertain.
Yeah.
Not to mention when clients or buyers go out there and they're trying to get approved, it's nerve-wracking. So to get denied 9 times, first of all, props to those people for having like the wherewithal to keep on
the
trying.
marbles to actually be like, okay, I'm gonna make this happen. They believed in themselves.
Yeah,
right?
That's complete side note right there. But when they've gone through that, I don't care who you are, how strong you are, that starts to wear on you. So it's just so important to have a lender that is completely taking care of everything.
Oh, and cared. I mean, as you know, I go above and beyond for my clients, but in that situation, I wanted him to have less stress. Mm-hmm. So that's why every single day I called, and I don't do that normally.
You know, he's already stressed out if his wife was 9 months pregnant.
Oh, that guy there was nothing that guy was not stressing about at that point, right? Like he had like everything, house, new baby coming, like pregnant wife, like he was dealing with a lot.
Right. So they actually got done. So that's a big success story.
It was. Yeah.
Those are the best ones.
Oh, those are the ones that, I mean, this is why you and I do it. Yeah. Right. I mean, we love real estate. I love mortgages, even though it's extremely unlovable item. Right.
What nerd loves mortgages?
I guess she pretty much just called me a nerd, right, guys? For those of you who are watching, yeah. No,
I mean, I love real estate and numbers. So my assistant and I are always in the office being like, is this weird that we're excited about this? Like, so.
Yeah, everyone loves real estate. No one likes mortgages. We've established that.
Yeah.
So, you know, going back to VA, and you were kind of telling me a story earlier that I wanted you to tell us is they assume if they're a veteran that they're just going to call one of the bigger advertising companies. We've got Navy Federal Credit Union, USAA. They do a great job, advertising. Veterans United, I think, was one I heard the other day that has a big, kind of a big market share. But you were telling me about a client you were dealing with, a pretty cool client, right?
Oh my God. She was, I mean, I hate to say one of my favorite clients, but she's awesome. I'm going to get her in here on the show.
Yeah. But tell me the whole experience. One, tell us a little bit about her, right? Because she seemed super cool. But then tell us what she was going through and kind of her experience, so everybody listening has a kind of a better feel on when shit goes wrong.
Well, she's kind of had a crazy life in the military. She was I forget what the exact word is, but she was actually a nurse out on the battlefields in Iraq. Like she would get off the helicopters to go get the soldiers that had been injured off the field. And I think, if I'm not mistaken, she was like the only female, and she's a little teeny tiny thing. She's like, I don't know, 5'3", 5'2", 100 pounds. She's a firecracker. She's awesome. And I loved hearing all her stories. But her and her husband, had been looking for a home.
Who also was a veteran, right? Did you tell
No,
her?
he was not. But she had been out there looking, and she just assumed that she needed to go through a certain banking entity in order to get that loan, to take advantage of her VA loan. And she actually had more options than she thought. So it's kind of a long drawn out story, and for confidentiality purposes, I'm not going to elaborate on certain things, but we started out with them. She had been kind of shopping homes on her own, reaching out to listing agents, trying to find houses and using random agents to go see homes. And when I met with her, she was like, all right, well, can we go see another house? I said, not till you sign a buyer's rep. She was like, tell me where to sign. Signed it. And we went shopping, found them an awesome house. But that VA loan allowed her to, first of all, she deserved what she's done for this country. She deserved the biggest house in the world, anything she wanted. But that VA loan allowed her to find the most perfect home for her and her family and her kids. And she also had another property that she owned in another state. And she had purchased that one previously with a VA loan. And she was able to get the necessary approval to keep that loan and also use her VA loan a second time.
Okay, so I'm going to jump in real quick. That's something a lot of people don't know, is you can actually have a second VA loan, okay? At the same time, you can also have a second one in general, a third one, a fourth one, right? So some people think that when they used it, that was it.
Yeah.
And that's not the case. So if you're listening If you've had a VA before, a VA loan, you can totally do it again.
Or at the same time.
And at the same time.
She was using that for passive income in another state and bought an amazing house for her and her family here.
Well, and you'd be amazed how many lenders don't know that. And then the clients all assume that they can only have one. So that's an amazing example of the power of the VA loan.
Yeah, the way you can take advantage of these loans that are available to our military, and they deserve it.
Absolutely.
I had another couple a few years ago that they were both in the Navy, husband and wife.
Okay.
And when I first started working with them, they said, yeah, we're using Navy Fed. That's who we're using. I was like, okay. We started the process. It was a nightmare. And it real similar to what my other buyers go through when they use like Chase or Bank of America or something like that. That a real similar experience to that. The loan officer that was assigned to their case, never get a hold of them. Nobody knew what was going on. It was a hot mess. And after a while, I was like, I talked to one of my lenders, and he was like, they've got other options. They don't have to use Navy Fed. They were like, well, we're in the Navy. We thought we have to use Navy Fed.
Right. Or at least that Navy Fed would have your best interests at heart.
They got a better rate, better loan, better everything going with a private lender, and ended up just ditching Navy Fed, which, no offense to them, I'm sure they've got plenty of success going on, but that happens often. I've worked with a lot of vets.
You have a lot of them that default to that feeling based on the advertising that they see. USA is another great example. Veterans United's another good example. I just saw a deal the other day where Veterans United denied the client for the VA loan super far into the process.
And they specialize in VA loans.
And they specialize. So you think just because somebody says they specialize or they advertise well, look, USAA does an amazing job in their marketing.
Yeah.
They do a great job with car insurance. They do a great job with car loans. They do a terrible job with mortgages. It's a different animal. Just because they say they want to help you doesn't mean that they know what they're doing, right, or that they are helping. It's somebody in a cubicle in another state, not really vested in that situation. Yeah. No, that's another great example. I want to talk about timelines. VA loans can take longer, okay?
Why is that?
The shortest answer is because the VA, you have to order the appraisal through the VA.
Oh, okay.
And that can take up to 10 business days. Okay, so it's completely different than a normal loan where you can order the appraisal and have it back in a week, back in 3 days. You can rush it. VA, it's going to take longer.
Okay.
Now, that in theory can hurt sometimes when making an offer. So if there's so I'm going to steal some of your thunder here. If there's a multiple offer situation and you need more time for your VA loan, but you really want the house, then that may be an example where a conventional loan or an FHA loan may be worth looking at. Because if you really want the house, you need to have your offer more in line than the timeline of a VA loan.
Yeah, and sometimes, you've got to actually see if a seller is willing to entertain a VA loan.
Right.
I represented a vet I was the listing agent, and we put the house on the market. We had like 7 offers in 2 days. It was a really good price point. Everybody was going after it. All of these offers were in place, and one of them was a vet. And from vet to vet, they've got a like soul connection. They don't even have to know each other. He saw that one of them was a vet, and he was like, done. I'm taking that one. Yeah. But just, that was just a very specific situation. But some sellers, when I go in to list a house, I ask them, what types of financing are you willing to entertain and kind of weather through? And there's reasons why sellers don't really want to deal with a VA loan. It leaves them. If they're 100% financing a loan, sometimes they're strapped for cash maybe.
Or the perception of that. They may not even be strapped. They might have
$100,000 in the bank, and if they need to come out of pocket $5,000 to cover that appraisal, then it's not an issue. But sometimes sellers have the preconceived idea that a VA loan is like, oh, if the appraisal comes back low, then this whole thing's going to fall apart, and that's not always the case. Right. But that's definitely one thing that I always encourage my sellers to accept those. So
yeah, and I think for me personally, I can close them in the same amount of time a regular loan would take with a bank or anywhere else. So we use that to our advantage when making an offer. 99.9% of the time, the VA loan is going to be the best option for the client unless they're putting down, 20% or more and doing a conventional loan. So I literally just closed a client Tuesday of this week where they were a vet. They thought they needed to go and do a VA loan.
Okay.
We actually ended up doing a conventional loan, and then I showed them the difference between the two.
So how do you do that? Did they start out saying they wanted VA and you started the process VA and then you get into it and you're like, wait, we can...
Yeah, almost every vet who comes to me knows that they have the VA loan, the capability of the VA loan, they want to use it, right?
Okay.
Because they don't know that could be pros or cons, and let's look at all of it. So when he came to us, and this was actually, he had already gone to another lender, and he was like, hey, I'm pre-approved VA, but his realtor referred him to me. And I was like, okay, that's great. And as I dug into the file, I was like, okay, look, here's what the VA looks like. I'm going to give you your options, obviously. But man, let's look at this conventional loan. And it was like one where they would have had mortgage insurance, but they paid. Actually, this is what really separated. So in his example, he was putting down, let's say 10%. Okay. The VA has their fee that they roll into the loan, which can get pricey.
And that fee you're referring to is because they're putting down 10%?
No. So on VA, they have a VA funding fee that they roll into every VA loan.
Got it.
It can be anywhere between 2 to 3% plus of the loan amount. So it can be thousands and thousands of dollars, right? So in this example, don't quote me. I think it was his second time using a VA loan. It was probably like 10 grand is what it was going to cost.
So on a $200,000 house at closing, they're really financing. If they're 100% financing, they're financing 210.
Right. Right. Well, in that example, maybe less, but correct. They're financing in that fee.
Okay.
So in his example, I'm getting into some serious numbers here.
That's all right. I want to understand.
I'm going to whip out a calculator here in a second.
No, it's great.
So in his example, he was doing a VA loan for a second time. He had a fee of 3.3% of the loan amount. I think put him around 10, 12 grand, something like that. I did the numbers. I showed it to him. I sent it to him. I said, this is what the VA looks like. But I think we can do a conventional loan and get you a much better deal. The conventional loan would have had mortgage insurance in the payment, except that you could do what's something called borrower paid mortgage insurance.
Okay.
And it's a fee that they'll charge up front so you don't have mortgage insurance in your payment.
On a monthly basis, you don't have that fee.
Right. On a monthly basis, you would not have it.
So you're paying it in a lump sum up front at the closing?
Yep. You're paying a lump sum. What was crazy is that fee was, I don't know, a third of what the VA fee was to do it with no mortgage insurance. So the loans looked identical in theory, except that the conventional loan's fee was like a third of what the VA's fee would have been.
Wow.
Now, what are the odds that happens? Very slim. 99.9% of the time, the veteran's going to do the no down payment. That's the best way to go overall. But in that example, that's a rare example where a conventional loan was a better option. If he's not presented with that, like lender number one didn't, then he's literally paying, $8,000, $6,000 more in fees because
nobody went the extra mile to look at his options.
Nobody went the extra mile. Hey, you want a VA loan? Cool, I got you a VA loan. It's like,
yeah,
you're not really
right.
Are you really doing the best for the client?
Yeah.
So that's a perfect example. While rare, that's a perfect example of where a VA loan would not be your best option.
So, but that involved a client that was putting money down.
Correct.
So I also want to touch on this. I know in the very near future, things are changing a little bit as far as qualifications and requirements for VA loans.
Yep.
So it's right now, currently in 2019, it's 0% down on a house up to how much?
$484,000.
Okay.
So that's the max loan amount with no down payment. So if you bought a $500,000 home, there's actually a calculation for it on how much of a down payment you would have to put down due to the difference, et cetera, et cetera. So it's not zero.
So you've got to, regardless of what you buy, you've got to bring down the loan amount to 484.
No, you could do a VA loan. It's called a jumbo VA loan where it would be higher than 484, but there's a down payment.
Okay.
Starting January or the beginning of the year, January 1st, which is amazing news. 2020, sorry, because you could be watching this 4 years later, right? In 2020, January 1st, the VA is now having no down payment with no limit. So you could buy a $2 million home, a $60 million home, right?
No
I don't know if we have those here. $60 million home with no down payment.
And that's any state.
Any state. Yeah.
Wow.
Which is crazy.
Yeah.
So that one's going to be really exciting because a lot of times when clients would get into jumbo loan amounts, so over 44, buying a $600,000 home, they literally would you throw out the VA option because they didn't think they could because of the max loan amount. So it's a game changer.
Wow. This is an awesome program available to the military.
Yeah, no, that one's huge, especially as the prices in Houston increase in value.
Yeah. Nowadays, when people are buying a home, they're going to stay in long term. They're really looking in the $500,000-$700,000 range.
Yep.
So this gives them the opportunity to take advantage of the VA loan with the no down payment.
Oh, absolutely.
So the only issue there is that they still have to qualify for debt to income.
Right.
So the monthly payment might go up a little bit. So as long as they can handle that, they're good.
Yeah, as long as they can qualify, they're good to go. No, that one's a huge piece of information. That's going to be a game changer when it comes out.
That's really good news.
Let me step back. There's another example too that I think's awesome that a lot of clients don't know, and some of them assume, right? So a veteran will think no down payment means no money, and that's not true. That's not the same thing. Right. So I've had clients
still closing costs,
taxes, insurance. So you'll have where you need to come up with money. Some of them think that zero means zero, and that's not the case.
Now, let me interrupt you.
Yeah.
With a regular buyer, somebody that's not doing a VA, certain closing costs can be covered by, if the seller concessions or a lender can come in and help out. But there's certain fees that are not allowed to be paid by anybody else. The buyer is required to pay those. Is it the same with a VA? Like they have to be the one to come up with the money that covers the taxes and.
So it's getting, you mean as in the seller has to pay certain things? Is that what you mean?
No, well, I know the seller has to contribute, but does the buyer have to pay certain things if he's a vet?
No.
Or she's a vet?
No. So in theory, and we were talking about this earlier, right? We were having coffee actually, so it was over coffee. You could, with the right realtor and negotiating, you could negotiate to where the seller pays all of their closing costs, right? Now, here's how that plays out. When you go and interrupt me because you're the expert, right?
No, you're the expert on this.
Right. Thank you. I am the expert on this part. So they go to make an offer. They write an earnest money check. Okay. An earnest money check is locking up the contract, right? Yeah. It's really solidifying the contract. Right. It's usually 1%.
Holding the house.
It's holding the house. And it is usually 1% of the sales price. Okay.
Right.
So let's say it's a $200,000 house. They write a check for $2,000. Okay. So the veteran is already putting $2,000 into it. Okay. If you get the seller to pay all of the closing costs, okay, so they have no down payment, we address that. Seller pays all the closing costs. When they go to closing, they actually get that $2,000 back. So I've had VA loans where they got their money back at closing.
So it is possible to close on a VA loan and buy a house where you don't pay anything, but the only way to do that is to have a realtor that negotiates in getting the seller to cover the closing costs.
Yeah, absolutely. And I'll be honest, you need to work with a realtor who has worked with veterans before if you're a veteran. And you just gave 2 examples of where you worked with veterans.
Oh, I don't know what it was. I don't know what it is about me, but several of my clients have been vets over the years. It's crazy.
Well, and you have to, because if you're not familiar with VA loans, then you don't know some of these items.
Yeah.
You also don't know about making sure that, if you work with veterans enough, going into it, okay, hey, we're also going to try to have the seller pay all the closing costs so you come up with no money. Right?
Yeah.
If you don't work with veterans, you're going into uncharted territory and possibly screwing it up.
There's tons of little intricacies within there that you've got to know ahead of time what you're dealing with.
Yep. Oh, yeah, you absolutely have to. You absolutely. And I would think, again, and we kind of gave one example earlier, if you're a veteran, I want to see all of my loan options, right? And you hinted on this earlier. Even though I'm probably going to do a VA loan, I want to physically see those numbers and I want you to show me that the VA loan is the best loan for me. Look, 99% of the time, it's probably going to be the case. I still want to see the numbers so I feel comfortable. Because that client that I just told that story, if I didn't bring that to the table, he's technically getting a worse loan. So no matter how great it is, I still want to see it.
Well, and like to go back to what I was speaking on before, sometimes there's sellers. There might be a house. I have a vet that they're shopping for a home. I pull up the house and I look in the listing and it says that this seller is not going to consider a VA loan. And I know the reason why they wouldn't. I understand why they have that stance or have made that decision. So I'll go back to my buyer and I'll say, look, this is why they're probably not considering a VA loan. But if you've got money in the bank and you're willing to come out of pocket to cover the difference in the case of a low appraisal or something along those lines, then I'm going to go ahead and reach out to the listing agent and let them know, hey, I see that you guys you're not putting it out there up front that you're willing to deal with a VA, but I've got a veteran. He's strong buyer. He's fully approved. They do have the cash if they need to bring it. And then that opens up a new door for them. Now they've got a chance at a house that they thought they wouldn't be able to go after.
Yeah, that opens up a huge thing. And it's also you negotiating for your client.
Yeah.
I mean, that's a skill. That's a talent, right? And we see that on FHA too. Not to get into a completely different podcast topic here, but some of them will lean toward wanting a conventional loan option versus an FHA loan option. They feel more confident about the client, whatever it is. And so you really need to know your options because nothing hurts worse than losing out on that house on something that you could have done differently.
Right. Well, and if I'm ever in a situation like that, especially a multiple offer situation, I always become best friends with the lender because we can't buy the house without the money.
Yep.
So I'll ask, all right, they're approved for FHA or they're approved for VA. If I go in and the seller rejects this because of the loan, if the seller rejects that, I need something waiting in the wings. So I'm going to tell them right away. I'm going to say, look, I know it's a VA. However, if necessary, my client really wants this house. If we need to go conventional, they've already been pre-approved for that. So we can switch gears if we need to.
Yep.
So it's nice to be with a lender that's going to go ahead and have those options all out on the table when I go in to negotiate an offer.
No, absolutely. Absolutely. No, and you want to find people who are going to look the best out. Look out for your best interest. Right. Is how
Absolutely.
I say it. I mean, if it, hey, what do you want? Oh, you want a VA loan. Hey, okay, well, let's go make an offer. Okay, well, you didn't get the house. Or do you stress about as much as I stress about? I was very stressed at this guy that I wanted him to see.
Yeah, I want to get everything for my client, everything they want.
Yeah.
So I mean, going the extra mile, going over and above. I was with my assistant yesterday. We were taking care of a new listing that we're dealing with. And she was like, should I do this or is that too much? Or should I take extra photos or is that too much? I said, nothing is ever too much.
Right.
It's not too much. You can never know too many options.
Yep.
So I'm not a lazy person. I'm always going to go the extra mile. And that's how you are too. Of course, that's why I trust you to death with my clients.
Thank you.
Yeah. But
no, this was an awesome topic. Thank you so much for having me.
Of course.
Tune in for more of these. Your and our goal is to not just talk about these in passing or give you your textbook examples. Like the whole reason why we're doing these podcasts is to go over big topics in our industry, but give stories and give examples.
Yeah.
I think by having examples, it's much more easy to relate as a consumer to one, know that we're legit about what we're talking about, right?
Yeah.
And two is relating to, okay, hey, that's important. Hey, I want that person representing me.
Yeah. Or you realize, oh, I'm not the only one. Like,
right. That other people could be in the same spot. You could have your VA loan in another state and now you're getting transferred here.
Right.
And we literally in this podcast addressed how to handle that.
Yeah.
I mean, and that's really the value.
It's possible. There's so many things out there that you can, when it comes to real estate and making deals, negotiating and putting together financing, you can get as creative as the professionals working your file are willing to go.
Yeah.
So if someone tells me something can't be done, I'm going to exhaust every possibility. Until we know for sure.
And that goes back to that original story about 9 people got denied, right?
Yeah.
That I was talking about. If they had believed that first person was the end all, the god of VA loans, they're not in a home, they're renting right now with a new baby.
Yeah.
Right?
Yep.
So no, thank you so much, guys. Tune in for more of these because we're pumped about making them.
If you're a vet and you're interested in knowing your options and if you can purchase a home and how much you'd actually have to bring to the table to buy a home that you're interested in, contact myself or Dave. All of our information's in the description, and we look forward to seeing you next time.
Bye, guys.
Bye.